Those generate ridiculous returns. I've never seen anything like it. In Playa, they don't make the same numbers. In Cancun, they don't make the same numbers. For what you pay for versus the returns,
100%.
Buenos dias. Welcome to episode number 5.
Number 5
of Livin the Dream podcast, where we talk about everything lifestyle, real estate in Mexico. Ready?
I'm ready. Let's do it. Okay. So, what are we going to talk about on today's episode?
Well, on our previous episodes, we asked a bunch of people to comment and say, what do they want us to talk about? So, one of those people was one of our viewers. His name was Emmett Dean, I believe.
Shout out to Emmett Dean for commenting on our YouTube video and on our podcast. And he had a few topics that he wanted to
thanks for watching. And thanks for everybody else for watching. Robert De Niro, if ever you want to be on the podcast, reach out to us. We'll bring here.
The day we get the email from one of Robert De Niro's staff members saying, hey, he watched the podcast, he loves you guys, we want him on there. That's going to make my day, make my life.
Yeah, it'd be pretty great.
Yeah.
So the topics that Emmett wanted us to talk about is, how do you fund your property? That was his question. How can you fund it? Is there financing? Is it all cash? What's the developer financing look like? So I think that would be a great topic to talk about today, because on our Zoom calls with investors, that's a very common question.
Sure. Well, with anybody investing in real estate, right?
Yeah.
It's a common question in general. Most people have, ideas that their interest rates are 15 or 20% and they're like loan sharks or, stuff like that. But that's not actually true.
Yeah.
And there are ways for Canadians and Americans and Europeans to get financing down here. So let's get started. What are the 3 ways that you can really fund a purchase down here?
Sure. So the number one way is cash. Cash is simple, wire transfer. The developer receives it, sends a confirmation, and that's it. It's cash. If you have cash, cash is king. If you got cash sitting around, or you come into some money from inheritance or whatever the case may be, cash is king.
Okay. And number 2?
Number 2, which is what we've been seeing a lot of, especially in cities that have high property values, like New York, like Montreal, Toronto, Vancouver, San Francisco. A lot of people take out equity out of their properties and they use a HELOC, so a home equity line of credit. That is an amazing way to do it. Why? Because it puts cash into the client's pocket, and then the client can buy cash here via wire transfer again.
Yeah, I'm a big believer too. If you have a lot of equity or a good size amount of equity sitting in your house, it's not doing anything for you, right? Your house is going to appreciate, ideally, even in kind of uncertain times right now with high interest rates and the way that property values, at least where I'm originally from in Canada, our house has almost doubled.
Yeah,
in 6 years. And it's one of the reasons why we sold, other than coming down here. But we thought, is this going to double again in 5 years? I highly doubt it. Is it going to double again in 5 years? No.
A lot of things are peaking in Canada right now. Like they're at the, but that's what we were saying 10, 15 years ago. And now look at us again. So who knows? But you're right, 100%. If you've got money sitting in your condo, in your house that, you bought for 200 grand in like 1997, and now it's worth 1.6, you could use some of that equity and buy something spectacular down here that'll cash flow. And then probably, have a place to retire or go 6 months of the year when you're older.
Well, we always refer back to a lifestyle investment, right? Yes. Like if you're, in your mid-20s or 30s or 40s, 50s or 60s or whatever it is, you're going to have most likely a different reason for purchasing. Some want to purchase for high return on investment. Some want to purchase for relocation. Some just want the beach for 2 months of the year, right? So yeah, that's the 3 main ways: line of credit, HELOC, and 2 main ways: cash, HELOC, and of course the line of credit kind of falls in with the HELOC. Some people just have lines of credits that aren't attached to their home, right? Unsecured line of credits that they can tap into. Now, let me ask you a question. This is, what is the typical loan to value down here? What would somebody lend if they were to look at getting financing?
Okay, so this is the 3rd way, which is financing from private lending. This is very important. A lot of clients ask this, so pay attention. If you are looking to get financing in Mexico for a property, is it possible? Yes. There are lenders that we work with. One is in the US. I recently closed a transaction with them, and it was for $1 million. The client put down 300,000 and then the lender put 700,000. It was a breeze. It was a 60-day close. Our legal team, their legal team worked together. We set up a delivery and possession date and a closing date, and literally last Friday was closed. So is it possible for Americans? Yes. Is it possible for Canadians? Yes as well. I'm currently closing a transaction for 600,000. It's a 4-bedroom villa with a lender out of Alberta, Canada. Private money, private equity firm. The banks in Canada will not finance down here, and neither will the banks in the US. As soon as Mexico is mentioned, for some reason, they don't want to take on that risk. They don't feel comfortable, which is fine. And a few companies saw that there's a big opportunity here. So the 2 lenders that we work with that have been great from the US and Canada, they finance our clients down here.
Yeah. Now, let me ask you a question, because it is not as simple as a traditional mortgage, but it's the same steps, right? I think it's more or less the timing. Like back home, you can get pre-approved pretty quick, and you can get pre-approved here quick. But the process to actually get the funds is a bit longer than what it would be in Canada.
I would say not a bit longer. It's quite long. It's like you're looking between 2 and 4 months to close traditionally. If it's 2 months, it's great. 3 months, okay. 4 months takes a while. So you're absolutely right. Mexico is more of a manual country rather than an automated country like the US and Canada. So there's a lot more paperwork involved. There's a lot more checklists involved. And to get back to your question, so how does financing actually look like? All right. Let's say you find a property for $1 million. Just for easy numbers, okay? The best LTV that the lenders will offer is 70%. So the buyer has to put 30, and then the lender will provide the 70. They take care of the closing costs as well, so the closing costs can be incorporated in the loan, so the client doesn't have to pay for that. And the terms are different, but they're between 20, 25, and 30 years, depending on which lender.
Amortized. Blended payments as well. So you're actually building equity every month that you're paying down the mortgage.
Oh, yeah, 100%. And it goes towards, your payment's fixed as well, right? So it goes towards the equity, it goes towards interest. It's not interest only, which is nice. And a lot of clients like to use that as leverage because, they could build equity as they go. And if you have to put 300 down instead of $1 million, huge difference.
Yeah.
Huge difference.
Oh, yeah, of course. Well, yeah. And not only that, once you get into those bigger, larger villas, you can fit more people in them, and you will ultimately make a higher ROI.
Oh, the cash flow on those is spectacular. To touch on that point of the large-scale villas, let's say it's $1 million. Great, you can get financing on that if you approve all that stuff. However, if you want to get more of a smaller unit, maybe a 2-bedroom penthouse at 400, that's also possible. The one thing to remember is these lenders will not finance anything below, I believe it's 225 or 250, somewhere along those lines. We'll have to double check. But the important thing is it's possible and it's doable.
Yeah, absolutely. So one of the questions that I mainly get especially when I do my 15-minute exploratory calls with certain clients, and not certain clients, all clients, it's like, hey, send me what you have. Well, it's not that simple. We have everything from $100,000 studios to upwards of $18 million mansions on the ocean, right?
Yeah.
So I always like to do a 15-minute exploratory call with a client. So if you are looking to buy, we have a link in the description below, and you can book a Zoom call. But can you finance pre-construction?
Good question. You already know the answer.
I already know. I'm asking as if I'm like fresh, don't know what I'm doing, but I have money and I want to figure out how to invest down here.
Yeah. So when you want to finance something here, the easiest way to do it, as you know, is if the property is ready. So it's a resale. So somebody's, they bought 2-3 years ago and now they're reselling, higher price point, and somebody else wants to buy it. They can apply financing to that. No problem. Why? Deed and title is in place. Régimen condominial, which means the HOA is in place, and all the other documents that are needed for the loan are in place.
Yes, packaged nicely, ready to go.
Yeah. So that usually would take about 2 months to close. So it's pretty easy to do.
Okay.
Now for pre-construction, yes, it's possible, but also not. So here's how. If you want to get financing on the pre-construction complex here, which a few of my clients are right now, yes, it is possible. Why? If the developer is okay with accepting a payment plan of 30% down and 70% at delivery and at close, then yes, you are able to finance. But it may be risky. How? If something happens over the next 2 years where you've taken on a bunch more debt and then you go to reapply for your loan, all of a sudden you can't get it, you're in trouble.
Well, yeah, because it is a legal binding contract that you get into. And if somebody loses their job or gets ill or whatever it might be, that's kind of the one big risk of the pre-construction, right?
Yeah.
And I've actually even heard of 20% down and 80%, but a lot of these it's not for everybody. Like a lot of developments will only have select amount of units that they allow that, because the traditional payment plan is 30% down, 60% during the course of construction, 10 on closing. So they want a good chunk of those so they have monthly cash flow coming in. But it is possible. It just depends on the development, how many units they've sold, how long
the developer says yes. I mean,
and if the developer
might be like, beat it. I'd rather sell this to somebody in cash instead of waiting for 70% of my money on this unit for a year and a half, right?
Yeah,
so.
Exactly. So another question on the mortgage side of things, where a lot of people focus on it, are the rates.
Yeah.
Okay. And when I first heard the rates, I thought, I know you guys are going to have the same kind of impression. I thought, oh my God, that seems really, really high. But when we actually break it down into a pro forma, break down the numbers, and we put it out as to what it is, the return on investment is still incredible.
Yeah.
And now instead of buying one property, I can buy two properties that are appreciating at the same time and both cash flowing. So why don't we share about kind of the rates and any prepayment penalties that are applicable?
Sure. Just to touch on that, I think about a month ago, I had a group of investors. So it was a syndicate fund from Miami. And that's exactly what they did. We found them 4 villas because they wanted to turn it into 3 times 4, that's 12, into a 12-bedroom, like,
awesome.
Right? So what they did was exactly that. Instead of buying one for 1.2 million, they ended up buying 4 villas at 500,000 a piece, and they only had to put down 30% on each one. So now they're owning 4 villas instead of just one for the same price and putting less money down out of pocket. So rates are in between 9 and 12%. It really depends on the property. It really depends on the client's credit scores, income, all of that stuff, how many years they're going to be financing it. All of that has a lot to do and play. And then also too, the lenders, they'll provide a mortgage breakdown in Canada. So if you're buying a property, you get TD, they send you per month how much, blah, blah, blah.
Yeah, basically a mortgage statement where the fees are going, interest rate, principal paid down, etc., all that good stuff.
So they'll send that over. Prepayment penalty, there isn't any. However, some of the lenders that we work with, they say you must have the property for at least 18 to 24 months. If you want to prepay it off, sure you can, but you got to wait at least 2 years, which is...
It's typically like breaking a mortgage. If you get a fixed mortgage back in Canada for a 5-year term and you want to break out 6 months later, right? Well, then you're going to be paying that mortgage penalties to get out, right?
Well, you shouldn't be buying a property for a year anyways. You should be buying it for like the next 5 to 10, right?
It's a long-term investment, good cash flow, building appreciation, building equity.
Especially with the airport that just opened up. Like, why would you sell right before the airport opened?
Yeah, exactly.
So don't sell. Keep your property.
So say, let's put this scenario in. I buy a property, and we don't just deal with $1 million properties. We deal with everything. But let's use $1 million, for example. So 30% down, lender gives us 70%. We pay down the 70%, and say in 8 years, 9 years, 10 years, that, villa has appreciated. Can I refinance?
What a lovely question, Matt. And I'm sure you know the answer to this.
I know the answer, but I want to hear from you. And this is for everybody watching, right?
Sure.
These are questions that from an investor point of view, I would ask, because there are things called the BRRRR method where you buy, rent, rehab, thank you, and then repeat, right? Refinance and repeat. That was a bad BRRRR method, but you understand the concept.
I do.
So we do have those type of scenarios for certain investors, experienced investors. Mm-hmm. But say I just buy one property and we, pay down the mortgage. Can I add more financing to it with the new appraisal price?
Yes. 80% is usually what the lenders will give. 80-20. Sorry, up to 80% of the property value. That's what I was saying. Yeah.
80% loan to value.
Yep.
Typically, when if it's pre-con, you're buying it for the first time, they'll do 70%, 30%. Down from the buyer, and then on a refi, you've shown that you can prove yourself, and you're paying the loan up to 80%.
Yeah, so it's good. I mean, there's options. That's a good thing. Cash is king. HELOCs are great, and then you've got financing available too. So
awesome. Okay, last thing we're going to talk about, then we're going to wrap this up, is syndicate funding and group funding.
Yeah.
Because we have a lot of people who say have $100,000 or $200,000. They want to get into the villa space, and we've kind of created this unique community of bringing an option to our clients where we can actually pair investors together to get out of, say, what they would have been able to buy as a 1 or 2 bedroom studio, 1 2 bedroom. And now they're combining with 4 or 5 other qualified investors, and we're finding them villas that are making 15, 18, 20% ROI because they can fit more people, private pools, a lot of amenities and value stacking of private chefs and transportation, all that good stuff. So that is kind of a fourth option for people who want to get and be a part of the appreciation and cash flow.
Let's be honest. I mean, a lot of local agents here will say every investment's a good investment. This is a good deal. That's a good deal. When in reality, it's not. There's only a few types of products that actually make good rentals here, right? So you've got your penthouses. They obviously generate incredible returns above and beyond the 8 or 10% that's promised. You've got your 3-bedroom villas. Those generate incredible returns too. If you're buying a studio that's mid-floor for $99,000 or $110,000, I mean, it's great if that's what you need and want, but don't expect it to make you, $25,000 net on Airbnb. It just, there's a lot of them out there, right? So you got to go after the scarcity and the niche markets, which that includes the villa space, the penthouse space, all of that. So when it comes to syndicate funding, yes, I highly recommend it. I had a 3-bedroom penthouse that was purchased from a group out of Ontario, and it was 8 of them. Shout out to Soulful Ventures. 8 of them that purchased that 3-bedroom penthouse. And it's great because you're not dishing out all your money. You've got other investors in. You can buy a super nice product rather than a mid-floor, 400 square foot studio. And it's a great idea.
Yeah. So anybody watching who's interested in that, who thinks, oh my goodness, they're only talking about $300,000, $500,000, $1 million properties. If you have some cash that you want to invest, reach out to us and let us know, because we have investors almost every week now reaching out and saying, hey, you had talked about this, or I saw this reel or whatever.
I only got 150, but I want to get into the larger space.
Yeah. And they understand that with the infrastructure of the airport, and we're not going to get into all that, but just the way that Tulum is set to continue to grow over the next decade or two. Plus, it's that they want to be a part of it. Plus, they also get to use the property.
Oh, I know.
Right? Then the owners can figure that out. We can give them kind of some parameters, but typically they get a week or 2 or whatever it is per year and enjoy with their friends and family.
I'm pretty sure that we've literally just created a new company.
Well, we just kind of been molding from real estate to developments to Elements Capital to Elements Investments, but it's all in what is needed down here. Nobody else is really doing it in a meaningful way who can actually explain it and have the system set up.
And that's super fair because, a lot of Americans and Canadians, they have their doubts about Mexico, and some people, they just don't want to spend 5, 6, 7, 8, $1 million in Mexico, which is fair. They want to spend 150. Great. Get in touch with us, like Matt said, and we could curate this together. We'll do. It's Elements Capital. We've been talking about it for a while, and we're going to start raising funds with different investors together to buy large-scale villas, because those generate ridiculous returns. That's why we're getting into the large-scale villa space.
Of course, that's why we're building one together.
Ridiculous returns. I mean, I have AirDNA. I've never seen anything like it. In Playa, they don't make the same numbers. In Cancun, they don't make the same numbers. For what you pay for versus the returns.
100%. All right, man. Well, that is pretty much the episode. We want to keep it more specific on certain topics. I know we could keep going and going and going. So that's our funding in Mexico episode and sharing a few different options. And of course, if you aren't subscribed already, make sure you subscribe to our YouTube channel. Follow us on Instagram as well. We also have a free buyer's guide in the link in the description below. And again, shout out to Emmett Dean for giving us something to talk about. And again, on this episode, put in your comments what you guys want us to talk about on our future episodes.
Yeah, we should... if people start saying, hey, how's the food? I think we should go and film us eating some tacos or something.
Pavel, you down for that? Pavel, we'll go eat some tacos. And actually, we should go to our favorite taco spots, our favorite restaurants, film it.
Well, we'll let the audience decide that, all right?
All right, cool. Sounds good.
Thanks for watching, Robert De Niro. If you want to get on the podcast, we're here for you. And this is Living the Dream Podcast, everything Mexico, real estate, and lifestyle.